Finally, it is Monday again. It is another week with MicroStrategy content coming up. And let's face it, last week was the launch of the two first ever weekly MicroStrategy content shows. One of them, obviously, being what you're watching, which is MicroStrategy Mondays, which I'm having fun with here with brilliant minds of MicroStrategy, understanding financial analysis, etc. And then there's MicroStrategy True North, which is being streamed Wednesday, 7:30 West Coast time, Best Coast time, if anyone's in doubt. And yeah, so uh, I'm excited right now because we're staring into 12, I think, super exciting, some of the most exciting months in this space. First of all, because I think we'll see the Bitcoin bull run that we did not see in 21. It fizzled off, and then also because we are right now, and that's what excites me a lot about the whole MicroStrategy story, the community, characters like Ryan here and Ben and Jeff and a bunch of others, grain of salt. That's and that whole ecosystem or community and sharing of ideas, open source analysis that is happening. And I think MicroStrategy, what we're watching is MicroStrategy really that it is potentially the most interesting corporate history in finance that we're watching the establishment of right now, because it's creating what we've never seen before. Like, we know Bitcoin is the true asset black hole sucking in value. It's the hardest money ever. And then MicroStrategy, in my opinion, and we can get more into that, really what they are right now, and their fine tuning is putting a layer on top of Bitcoin. Like, don't get me wrong and misinterpret that, but if you have Bitcoin and then you have MicroStrategy becomes the very easy gateway for hundreds of trillions of dollars in the legacy financial system that now actually, through the tools that MicroStrategy is offering, which Ben knows a lot about, the convertible bonds, which is one of the reasons he's here, can suck that in through MicroStrategy in a way they benefited into Bitcoin. So they buy a ton of Bitcoin, which will have a direct positive impact on the speed at which hyper Bitcoinization happens, in my opinion. But obviously, I could be very wrong, likely am wrong, and nothing here is financial advice. We're just currently three dudes here. Sorry, Jeff couldn't make it, Ponder. We're three dudes here trying to figure it out, having fun, seeing what are we getting wrong, what are we getting right, and just learning as we go. So none of it is financial advice. I also do want to say, as I did last week, that I consider Bitcoin in cold storage as the most pristine asset mankind has ever seen. I am not at all advocating for leaving that or going away from that. For me, I have a little bit of exposure to this because I find it so exciting, and it is fun to have skin in the game. So for MicroStrategy Mondays here, which is the show, there's two things I consider like the purpose. One is evaluating MicroStrategy as an investment. The other is looking at this role MicroStrategy plays in the greater Bitcoin system, like I was explaining before, connecting the supreme asset, pristine asset with legacy finance, and making energy flow from legacy that is dying to get out of terrible situations where they are stuck with mandates to own a lot of bonds and only bonds. But then MicroStrategy or Sailor's like, that's cool, but you can get these bonds where you get Bitcoin upside. We'll take most of the profit of that. You'll have reduced downside, et cetera, et cetera. But I could go on forever. So I think actually I will round this introduction up by saying that currently MicroStrategy is valued at around $750,000 Bitcoin. For me, Bitcoin has been the unit of account for years now. And when I look at, well, is MicroStrategy a good investment? I like to look at it, well, what is it value in now in terms of Bitcoin? And that's sitting around 750,000. Bitcoin. They're holding 252 plus whatever they've bought that we don't know about yet. And to me, the end game is looking at how much Bitcoin do I think MicroStrategy can accumulate. And when they're done accumulating, when fiat doesn't exist anymore, when the dollar has died, what kind of profit can they make from being having the strongest balance sheet of any company in the world? And then that has some value to it. And I think I'll leave it there because I've spoke more than enough. And then, yeah, I want to quick introduction. So Ryquant here is part of Quant Bros with Jeff. He couldn't unfortunately be here. Ben, from what I have experienced listening in, Ben, to the many shows you've been on, has absolutely outstanding, phenomenal insights into the convertible bonds, especially, I think options also. And really just like, to me, these three gentlemen are the by far most foremost financial masterminds when it comes to how MicroStrategy is using these different tools and the whole story. And that's why I'm very happy to have them on. So welcome, guys. And Ben, thank you, and welcome to you for being on here for the first time. And now I'll try and be a little bit quiet, although it is something I'm struggling with. But please add some words that you would like to add at this point in the.
I just like to tell everyone that I think my crowning achievement early on was being the first guest that the Quant Bros had. So, that's a designation that no one's ever going to take away from me. So, everyone else can try, but they were never the first guest Quant Bros ever had. That's mine. So here we are. So I had no choice but to go deep down the MicroStrategy rabbit hole, I think, because that's kind of where it all started. They kind of found me out here while I had, probably at the time, I think I only had 600 or 700 people following me, maybe. And luckily, I'd gotten a shout out from Adam Back on something I did back in the day. I don't know how he found it, but life's a lot of luck. It's a lot of right time, right place, right content, finding the right people. And so we all make it here to these types of chats, and I'm more than happy to be here. Ryan's amazing. I've seen a lot of the stuff you've done, Anders, and I'm just happy to be part of the group here.
Cool. Well, I'm super happy to have you. So welcome, Ben. Ryan, thoughts off the bat before I go into, I have actually prepared. I actually have questions and thoughts I want to share with you guys. But Ryan, good to see you again, man. It was fun last week.
Yeah, Anders, I was actually getting pushback just right now on Twitter about not being able to reshare the space. I had to press it 4 or 5 times, as in with a lot of my posts, I have to press them 4 or 5 times over and over again to just be able to post what I'm saying. But yeah, I mean, you're the best.
So did you succeed with that now? Did you manage to retweet the space? Is it what do you call it? You call this a video space, or what do you call it? Were you able to or no?
Yeah, live right now with the Code of Finance, Ben, and the wonderful host Anders. It did just officially post, but some of these things take me 4, 5, 6 times, and not just on camera right now, me trying to post something. I mean, me putting out thousands of words, it'll take me 3, 4, 5, 6 times to post something. But with that being said, it's great to see you, man. Anders, you're the man. It was awesome. It was absolutely awesome to meet you in person and get to talk. We're not just WWE characters on the internet. We are actually also real people. Yeah, that's the secret. But no, I mean, you're a wonderful person in terms of all things, in terms of being a welcoming guest, a friend, someone who you just want to talk to more. And that's what I think of you. You know what I mean? Someone who I want to be here. I don't have to be here. I could be anywhere. I want to be here. I want to talk to Anders. I want to talk to Ben. I want to talk to Jeff. I want to talk to these guys more often. And to just echo Ben's sentiment, I think I either talked about this on the first episode last week, or I talked about this on True North, the first episode, which was also last week, in terms of I have lived a life of mediocrity in terms of like being an average student in high school. I was an above average soldier in terms of like stamina, performance, those sorts of things, but like an average, basketball, football player, those sorts of things, very average. And now I find myself in this such a peculiar position where I'm involuntarily, keyword, working with like the smartest people I've ever met. So that's an extremely, number one, overwhelming thing. But then number two, like, I'm just glad to be here, like to echo on Ben's point. So I'm just happy to be here, happy to be along for the ride,
No, absolutely. Same here. Thank you for the nice words. Above average. What about hitting? Could you hit anything as a soldier, or were you average there as well? Or is that PTSD we're getting into?
Well, I mean, as a soldier, with the whole like push-ups, sit-ups, running, like that stuff in the gym, I feel like I kind of was off the charts, like ruck running, like being able to run with 50 pounds of weight on you in 12 miles. I could do that just under 2 hours. Most people would like never be able to come close to that. So like in those things, I felt like there was like an excelling capacity, but in the broader scope of my life, right? The broader scope, it's been a life of mediocrity, average academic performance at best. And it's just so crazy that like, one of the things that I talk about is like, you'll find yourself on teams throughout life. And I don't mean teams as in like the Microsoft software. I mean, if you're 18 years old, you're going to be a soldier who gets assigned to a platoon. You might like them, you might hate them. It doesn't matter. You're assigned to that platoon. It is what it is. That's a metaphor for life right there, because I saw the same thing in the corporate job, right? Like there was some like PhD level, like data scientists, stats PhDs, machine learning guys who would show me slides and their own Excel files that just like warped my perception of reality. Like it was so deep. I would have to stop them constantly in like one-on-one meetings and be like, I don't get this, I don't get this, I don't get this. But it was just so crazy, right? But that was like kind of you're forced onto that team. Now I feel like I'm on a team that I didn't pick, but I'm just glad to be here on the ride. You know what I mean?
Absolutely, and it's definitely fun. Ben, what happened to your background? Did you switch the light off from the pool table, or is that a green screen, or do you actually have that pool table there?
No, it's just a pool table, and it's just dark here, and I tend to dwell in the darkness. I told Ryan on a lot of our calls I end up looking like a supervillain, so if it gets too dark, I'll turn on more lights. I got a couple on. It's not as dark in my room as it seems like it is on the camera, but one of the things I've not invested in yet is a good camera, so this one's just coming out of the top of the monitor, and that's just what I have to live with here.
True Bitcoiner.
Yeah.
Go ahead.
To Ryan's point, I think there's actually something to that where like I was very similar, right? I was not the top grade student, right? None of that. And what I found throughout the early part of my career was something very similar, where a lot of the people who kind of weren't as engaged in the schoolwork, it almost seems like they're waiting for something that they're actually truly interested in to unlock what they can do, right? And I was no different in a lot of areas, right? I started getting into coding and some other things.
Right, none of that. And what
I echoing?
Why?
The early part of my career was something very similar, where a lot of the people.
Wait, for some reason, I was participating on the YouTube chat earlier, just looking and telling people we're going to be a little bit late. And then the show started streaming on the mobile. I'm like, why am I hearing double? This is, this is MicroStrategy Mondays. It's super professional. It's how we roll. Back to you, Ben.
Yeah, so I was just gonna say, for a lot of people, I think, they go down a path that they feel like they have to go down, but they're never really engaged in it, right? They're doing it because it's a paycheck. They're doing it because it's where they landed, right? They couldn't get whatever their dream job was, and they took something else, and they're bored out of their mind. So there's no real incentive for people to dig deep on things. And so, like, when I left the corporate world, one of the things that I was really focused on was I only want to spend my time focusing in areas that I really do want to learn about, right? The only way I'm going to go as deep down the rabbit hole as I've been going with something like a MicroStrategy, and it was Bitcoin before MicroStrategy, is if it's something that I truly do believe in, and I really do want to devote my time to understanding every component of it I can possibly figure out. And so when you get something like MicroStrategy coming out, and I would guess Ryan's very much the same way here, you see this new story developing in the corporate finance world that nobody seems to understand and everyone's dismissing. And it really does draw you in and make you want to learn a little bit more, because you want to figure out what they're doing and why they're doing it, right? And that's half the reason all my posts are so crazy long. It's not necessarily that I'm trying to teach anyone else how this is working. Half of it's just train of thought, and I'm trying to figure out how it's working, right? And the best way to do that is to write it out so that I can reference it later. So I'm trying to write it out in ways that are pretty easy to understand, right? To the extent you can. There's some things that are a little complex, but you try to write them down as easy for people who don't have any idea what's going on to get a baseline understanding, at least, and start to see the scope of the opportunity that we're witnessing. And I think all of us are starting to catch on to here. And it really draws you down and makes you really apply everything you're interested in, right? It grabs your attention, it keeps your focus, and it makes you want to learn more. And I think, for people where they feel like they're underachievers, I don't think they're underachievers. I think they're not stimulated. They're not engaged, right? They don't care about what it is they're focusing on at that time. And so they're not dedicating themselves to it. But once they find whatever it is that they're willing to dedicate their time and energy to, right? You see a different side of people. You can see it on them when they're talking about it, that this is something they truly care about. And so when we found this group that, we kind of go around and chat with on Spaces, and we're doing the True North stuff, right? When you find a group of people who don't want anything from each other, right? There's no motive for me and Ryan to work together. There's no motive for me and Jeff to work. I don't need anything from them. They don't need anything from me. Now we can just talk ideas, right? There's nothing else underlying it. And so we can all dig into different areas, because there's a lot, right? I couldn't do top to bottom here on MicroStrategy any better than either of them could. You really have to be able to focus. And sometimes the best thing you can do is, once you have confidence in the analysis other people are putting out, is you can kind of take your hand off the wheel in that area and go, all right, now I trust that I can take in what they're telling me and apply that and tie it into what I'm doing. And we kind of divide and conquer. And therefore we can kind of build a really good understanding of what the model is and what those opportunities are. So it's one of the most fun things that I've done in a while. And I'm really glad to have found the group that I found to have these discussions with.
No, absolutely. I can fully relate to that. I also just want to say I'm very disappointed that for some reason in Restream today, it is not feeding me the chat. And I know there's a chat going on both on X and on YouTube. For some reason, it's not coming on here. So I can't read it. I can't throw it on the screen. I've always had a lot of fun with that. Guys, can you see it? Ben, Ryan, can you see the chat? Or you can't see the chat? Oh,
yep.
Great.
Yep, I can see it just fine.
Okay, the only problem is I can't really log out and log back in, because then the stream dies. So yeah, so sorry about that. I'm bummed about it. I love to have that interaction with people. But while we're at it, for X accounts, the first three there are mine. There's the Anders _ which is my main account, events by Anders. If I put up some more pleb parties, it's @2_Christians, and then there's Raekwon and Ben Workman, which are absolute must must follows. Hey, as an immigrant, the language barrier is real. I just want to say, but must follows right there. Raekwon and Ben Workman, and again, True North coming out on Wednesday is also a must. Let me close that one down. So I actually, as I mentioned earlier, did write down a few notes because the things I'm glad, Ben, that you're finally on here because some of this definitely is to do with the convertible bond market that where I think you are just really in depth with that. I mean, obviously Ryan as well, but do definitely want to pick your brain here. And I guess it really goes towards what Ryan, we spoke with Jeff about last Tuesday, the Tuesday that the Monday show was launched, about the giant convertible bond market. I was talking about 100 trillion and how that potentially can be socked in through MicroStrategy to Bitcoin. Obviously, some of it staying with MicroStrategy equity owners, really. So it's a train of thought. It's some questions that if yes, then. So it's a couple of questions that are kind of extended into each other. If I need to read it twice, I can do that. I may not need, but you let me know afterwards. And if we end up spending the rest of the episode on this, I think there's a lot of meat on this, but I do have more. But let me read this up for you guys and hear your thoughts afterwards, freestyle. So once the success of portfolio managers, which right now have MicroStrategy convertible bonds, once that is fully established that they have an upside and have hold bonds that outperform all other bonds, do you think that MicroStrategy can get away with 0% interest rate convertible bonds, where the bond managers essentially are paid with the upside, the access to some of the upside from Bitcoin? And if that's a yes, that we can move to 0% interest rate, is this tool still limited to the cash flow and the profit that MicroStrategy has to service that debt? Or are we no longer limited to that because there is a 0% interest on it and it's only the Bitcoin upside? So I'll carry through, and then you guys can chime in afterwards. So if it is not dependent on the profit they're making because there is no service to pay in terms of interest rate, are they then able to essentially end up continuing to take on convertible bonds simply based on the value of their balance sheet, which is aka the Bitcoin that they hold, and then can continue to sell convertible bonds with 0% a coupon paid only on the upside of the convertible bond when it converts, and that way can they go into the entire fixed income market, aka the bond market, or is there some of that bond market that are not allowed to have convertible bonds? Because bottom line, if these are the most financially attractive bonds for anyone out there, and the bond market, I believe, is 100 trillion, if not more, what are the limitations for? So yeah, with inflation and everything, maybe it's 200 trillion now, but what are the limitations for MicroStrategy actually just going all the way into that with the convertible bond offerings? Now I really do want to hear you guys' opinion. Ben, maybe if you go first here.
Yeah, for sure. So I think there is this notion of the performance of these bonds really driving a lot of the demand that we're going to see, but I don't think we necessarily know exactly where that demand's coming from. And while the first round of the convertibles are likely going to these convertible bond arbitrage funds that have the charter where all they can trade is convertible bonds, that's not the only potential buyers here, right? Which is really interesting. And I think right now it might be because they're new and that's kind of their charter and they're looking for volatility. That's how they're going to make money. But you got to think about these products and what they really offer. So if you were another corporation that's out there and you wanted to get Bitcoin exposure, but you wanted to limit your downside. Something that they could look at is they could look at trying to participate in these convertible bonds, because it essentially gives them a put option, right, which is the par value of the bond. So the worst case scenario, if they believe that Bitcoin is going to be good money, at least by the time it matures, where it'll at least have its value still, they'd get paid out the par value of the bond. They would have collected the coupon payments. So their only loss there would be the difference between the coupon payments and the interest they would have got on their cash, right? But right now, what's really attractive about these is I think that these convertible bond arbitrage traders have been really starved for returns, right? A lot of the places they have to go to buy convertible debt is very low volatility, right? They have to kind of take it where they can get it. And so if you're buying convertible bonds in a stock that's got 20 vol or 30 vol, right, something pretty low, your hedging strategies are not going to generate very much yield for you because it's not going to move enough, right? And so what these guys are doing is they're essentially hedging against the equity position of the bond, right? That call option that they have. And so what they're doing with that is they're taking on and off hedges, which are essentially short positions, right? As the price rises, delta rises, they start taking a bigger and a bigger short position as price climbs up. And then as the price comes back down, they'll take that hedge off. And what they're trying to do is just capture the difference between where they put the hedge on, where they took the hedge off, right? So if they've got something like a MicroStrategy that's 100 vol, that underlying equity is moving a lot. And that gives them a lot of opportunities to put on these hedges, take off these hedges, and make money throughout the life cycle of this. So they love this, right? These have been some of the best performing bonds that they could have got their hands on. And that brings demand to the table, right? These guys are going to constantly want to be reloaded with new convertible debt. I think the limiting factor on it right now is Saylor and MicroStrategy themselves, right? So they're sticking pretty close to a 25% leverage, which basically just means you've got the fair market value of their Bitcoin holdings, right? They're going to borrow up to 25% of that value. So if you go and do the math right now on, they've got the 4.26 billion in convertible debt out there. And then if you look at the market value of their Bitcoin, they're very close to 25%. And they've been sticking in that range. That seems to be the sweet spot for them right now in terms of what they need to generate the desired volatility on the equity. And so there's a scenario where Saylor could either up that, right? It's not a number that's fixed in stone, right? They just decided that that was their target. And that's what they were sticking to. And it gives them a reason to manage the type of debt that they're putting out into the market. And they're managing the supply of these new products that they're releasing out to the market. But they're oversubscribed every time that they offer one. People can't get enough of these things. And so the reason why you'll see me tracking a lot the conversion, right, whether they're eligible to convert, and just so everybody knows, it doesn't mean they have to convert. That's up to the note holders, what I'm tracking. And so if they hit that 130% conversion criteria where it trades at a certain price for 20 out of 30 days, if they hit that, the holders of the bonds have the right to convert now if they want to. So they could convert in the next quarter. So on the ones I'm tracking, if they hit in this quarter, they'll be able to convert in Q1 if they want to. And the reason they might convert is because of that hedging strategy. So MicroStrategy has been on a tear now, right? It's running up, and the higher the price goes, the more of that short position they're taking as they're delta hedging their position. Well, eventually they become fully hedged, which means they've taken out all the volatility of the equity movements. So that kind of takes away their upside. And if MicroStrategy keeps running away, there's a cost to holding that hedge. And they might want to get out of that. And they would particularly probably be interested to get out of that if Saylor said, hey, you convert, you can get in on the next ones that will launch. And that resets their delta position. And now they're back to trading again, right? So now they can start making money on these things again because they'll have already realized their maximum profit on the last one. So there's this huge demand for these convertible bonds. And I don't think people understand how deep that pool of capital is that's out there. Now, to some of your other points here, the rest of the bond market, right? This is only one subset of the bond market. Could we see something like a zero coupon bond? Well, the answer is we already have. One of their first ones was a zero coupon bond, right? No interest payments, so there's no drain on the cash flow. With the convertible bonds, yeah, you do have a little bit of a limitation in terms of your cash flow, as a cap for what you should really be comfortable holding on to. There's other ways, if he was really trying to leverage this thing up, that he could potentially work around that, selling shares, holding the cash, using that cash to hold for interest payments on new bond offerings if he wanted to. But right now, because he's trying to stay in that 25% leverage, he really doesn't have a reason to do anything else, right? Right now, this is so accretive to them that there's no reason to change this, because they're raising money 30%, 40% beyond the current trading value of the stock, and they're bringing that capital in, they're going and buying Bitcoin. That's highly accretive. So I think right now what they're watching for is they're watching for some of these to convert. I would guess, obviously I don't know, but I would guess that they're potentially getting ready to ask people if they would convert. They would like it. And then once that bond falls off their balance sheet, now that leverage ratio has lowered. So now they're not at 25% anymore. And if the value of their Bitcoin has grown, the new convertible debt that they might offer would be higher than the one they just redeemed. So it's pretty interesting to watch how these things are going to move and what types of new products they're going to put out there in the market, because I think they're just starting. And right now, they haven't had a reason to venture out because there's so much demand and there's so much accretive value that they're bringing in the door. If they found themselves in a position where cash flow is really growing, or they were getting a lot of zero coupon bonds, I mean, there's a scenario where they could start going out and doing just fixed income bonds, right? Just paying people 6-7% interest rate, and then arbitraging on what Saylor looks at as a 29% CAGR, all the way up to a 40% CAGR. I've heard it a bunch of times, but just take it at a 29% CAGR, and then they're pocketing the difference between that. The difference there is you're probably looking at Bitcoin sales on the tail end of those bonds in order to pay off those bonds, because those wouldn't be ones that would convert into equity. So I don't think they're looking at those right now. I think right now they want things to go into equity because in their view, it's not dilutive, right? People talk about dilution. They say the words accretive dilution. I've said the words accretive dilution. But really, they're taking this capital and they're buying an asset and putting that asset right on the balance sheet. So it's not in any way a net negative to any of the shareholders, right? It just adds that, it shifts that value from one asset to another. And because they're gathering it at further out pricing than what the stock is trading at today, it's an immediate win. So I think that they're going to keep with this playbook here for as long as it works before they decide to start getting creative. But if the demand gets really high, you could see these convertible notes coming out zero coupon, right? If they're saying, we have so many people asking us for these because they're performing so well, these guys want our volatility, they want to be able to trade these things, and they're willing to not have us pay them any type of coupons in order to get in the door on that, I think that's what they're going to do, right? Why wouldn't they? It takes all the conversation out about, how much is their cash flow going to be able to support. You get a lot of people talking about, well, when are they getting margin called? Well, never. That's not how these work. There's no margin call to these, right? That was when they had a Silvergate loan and there's different clauses. That was a whole different thing, right? Yes, you could get into the scenario at the end where you have to pay them off, and that would probably require selling Bitcoin or rolling them, right? They'd have options. But it's a fascinating story. And it's a very interesting approach that I think is going so overlooked by all these other corporations out there, because I don't think they've wrapped their head around how this just becomes a black hole for institutional capital, right? And so this is the best way for a company like MicroStrategy, as they scale, to go and take in this institutional capital that wouldn't go to Bitcoin otherwise, pull it into the MicroStrategy ecosystem, and they'll deploy it to Bitcoin, right? These other firms don't have to do it on their own. And if it was companies buying the convertible bonds, they wouldn't have to do it on their own. But they can pull that into their ecosystem and they can go deploy it into Bitcoin. And so it's just kind of this way to get exposure that I don't think a lot of people really anticipated, but it's been wildly successful. And I don't see any reason they're slowing it down.
It's truly exciting. So yeah, what you're saying is so far we're seeing MicroStrategy saying, yeah, but we don't want to take even convertible bonds up to more than 25% of our assets. And then two things open up for that sort of for them to have space. Either the price of Bitcoin goes up, so that convertible debt now is becoming, instead of 25%, 20 or 15, whatever, because the value of Bitcoin goes up, which we're all expecting, I think, the next 12 months, although never in a straight line. And the other thing is, as you touched upon, that some of the bondholders choose to convert and then get to take on new convertible debts. And I guess that can be the bait from Saylor. Say, if you convert now, then you get to have right of first refusal, as we were talking about last week. Remember, Ryan? Yeah, but Ryan, what's your thoughts on that? So I guess the 100 trillion is not coming into tomorrow or this year. We're gonna have to roll with that. What's your thoughts on this, Ryan?
Look, I mean, it's funny here, right? I of course co-sign everything that Ben just said, but this whole like $200-300 trillion number that like Ben and Jeff are throwing around casually, that's too big for me. I respect them and I love these guys, but that just shows like their greatness in these moments, that they're able to conceptualize these specific numbers that are that large. And I do want to share an anecdote. I was on the phone about 12 months ago with someone who was way richer than me, older than me, that whole stuff, like a casual mentor type phone call. And I was asking him, I was like, why don't these people just buy MicroStrategy the stock? Like, why are they dealing in like the complexity of the bond market and the returns and the this or that or the whole if then else statement of like what they can get on the risk reward? I was like, why are they even doing that? Why aren't they just doing what like me, Jeff, Ben, blah blah blah, all these guys are doing and just like taking a forever position in the stock? And what he told me was very eye-opening. And this was right before the IBIT options, like options. That's what I want to talk about later. But this was right before like the IBIT like ETFs like even started trading. And he was like, hold on a second, young man. Young man.
Hey, you're still getting that.
He was like, hold on, young man. He goes, there are so many fixed income and debt type offices that are funded in such a way where they can only buy fixed income or debt type instruments. And to me, I was lucky enough to be on that one-on-one phone call with this gentleman who I will not name, but like it like for me to understand that at that point 12 months ago was truly remarkable, right? Because it just made so much sense as to why any of this stuff would go on, about the at par rate and like the strike price and all this stuff. Like that's what I do, dealing as an individual like options person, like dealing with strike prices and all this stuff. So I was like, why don't they just buy the stock and just not even like care about the outcome? But he was like, hey, young man, there's a lot of money, and he's, rich off on his own in Europe somewhere. I don't even know which country, but he's going to be fine. But he was like, hey, young man, there is so much like in the pools of capital who have to deal in these markets, or they have no other markets to deal within. Hence why all of our, convertible bond, convertible debt offerings end up being oversubscribed, right? And it's no secret. And I've talked about this with Dylan LeClaire publicly, online and offline, about MSTRs like bonds are the best performing corporate bonds in America right now. Like that is just like an undeniable like reality of the human condition. So much so that it's like, this is the way that either, high net worth individuals, me and Ben have talked offline about, maybe it's like Bill Miller the third, like sporting them $1 billion in cash and he's like massively long the underlying, but he's sporting them $1 billion in cash. But it's not even just these guys in like small, right? It's not even just these guys in like they're small. It's not even just these guys like high net worth, like individual offices. It's also all of the bond market, right? That's where I get into that like $200-300 trillion like bond offering. It could potentially be like a Microsoft corporation, the company, as the buyer of like the next round of bonds, because perhaps they don't want to, take a direct position in Bitcoin, but they still want the Bitcoin exposure. And here's the thing I'll leave you with, and then I'll pass it back. Nobody, and I want to look into the camera on this. Nobody, look at me, camera. Nobody is talking about this kind of stuff with like IBIT options. It doesn't exist. Not only does the IBIT options market not exist, which we'll get into later. We'll get into that later, but it's like nobody is talking about this level of value creation across like many different markets, both equity and public debt and like corporate debt and all these other sorts of things. Nobody is talking about this with IBIT, with BlackRock, with Larry Fink. Those conversations are just not happening. It's happening through an operating company. It's happening through MicroStrategy. You know what I mean?
I think something that's really interesting around that as well is when you look at all the different, to what Ryan was saying, you've got all these different customer groups. That's what I've started calling them now, right? They're customers of these new bond products that they're bringing out to the market. And they've all got different things that they can do. But I think what's interesting is you also, when we listen to Saylor going out and pitching this to everybody, trying to tell everybody to do what he's doing, right? Part of the reason he does that is, one, yes, obviously it helps him, but two, I think he recognizes that MicroStrategy alone can't onboard the level of capital into Bitcoin that should move to Bitcoin. And so what he wants other companies doing is he's looking, going, we have so much demand here that we can't possibly fill it all, right? We throw out a number, everyone always oversubscribes, they want more, they want as much of it as we can give. If we could get 10 other companies that started issuing these types of convertible bonds where we could start to tap into this market and bring that level of institutional capital, and we could accelerate the adoption here so much faster. But when you look at the different types of bonds, part of the reason I don't think that MicroStrategy is going down the route so far of, why don't they do a secured bond that's backed by Bitcoin? You could probably get some good money for that one. Or why aren't they doing the fixed income? I think when you look at different companies' profitability profiles, I think there's different addressable markets that certain companies can take, right? MicroStrategy isn't big enough, and they're not a big enough cash flow company where I think that they're going to spend their time issuing bonds they know they're going to have to redeem, right? Their optics are, we buy Bitcoin, we never sell Bitcoin. But if you have a company like a Microsoft that generates wild cash flows, and they decided to go out and say, we're going to issue, a fixed income bond for $20 billion. We've got the cash to pay it out at the end if we want to, but we're going to take it. We'll give you 5% because you're buying Microsoft debt, and we're going to go buy Bitcoin with it. They can just buy the Bitcoin and then they can pay it off using cash at the end if they want to, right? Because they have that type of size on their balance sheet. So part of this is, companies, yes, while Saylor's beating the drum on what his strategy is right now, I think people also need to start looking at these companies and go, there might be different fixed income products or different bond products in general that each of these companies can issue that makes them a unique player in the space in their own right, without just doing exactly what Saylor does, right? While Saylor's given everyone his playbook so far, he hasn't needed to tap into all these other customers that are out there for these types of products, right? You can be sure there's a huge market for fixed income, right? Because just look at all the 60-40 allocators out there that are putting just fixed income bonds in their retirement accounts and all these. Like, there's a huge market for that segment. But I think you would really want some of the really big, really heavy cash flowing companies to come out and start issuing those first, because I don't think that they're as interested in issuing their equity as they might just be in, hey, we could probably capture the upside on the Bitcoin that we're going to buy with this bond issuance, but we've already got the cash to cover these bonds, so they're very low risk, and we can't come up with anything else to do with the cash anyways. So if we don't want to get rid of our current cash stash and we want to pump that down the road and see what we can do with Bitcoin, they might be the ones that enter into that market and go, all right, this is the piece of the bond market that we're going to corner, right? Let MicroStrategy run these converts. They've got a winning strategy over there. We're going to tap into a different customer group, and we're going to onboard a different type of capital that all goes into Bitcoin, and it helps rise all the ships that are participating in it. You get enough companies doing this strategy, going out and grabbing the trillions of dollars of institutional capital that's sitting out there looking for something to do, and they're bringing that in their doors, and then they're going to the spot Bitcoin market and buying Bitcoin with it. Well, that just inherently rises the strategy for everyone. It becomes this loop that is successful for every party that's involved. And I think people so greatly underestimate that. And I think most corporations are totally asleep at the wheel. I don't think that they see this yet. And so I'm not surprised to not see very many people doing this. You know, it just seems like this weird concept. But I think that the first 10 that really do it heavily are going to be massive companies in a decade, right? I just think they're going to be so far in the lead that they're just going to be these behemoths, and this is going to be one of their main products. They're going to be an onboarding platform for institutional capital. They meet what those guys need as a requirement for the things that they can trade in, and they're going to support the Bitcoin ecosystem by purchasing the Bitcoin. And when you start getting that level of capital in, that's when we start moving towards this supply shock that everyone starts talking about, because it's this constant refilling demand cycle, right? A convertible bond converts. Now there's new capital to come buy spot Bitcoin, right? They redeem a bond over here. Now they're issuing a new one. They're bringing in new capital. They're bringing it into the Bitcoin. It becomes this massive loop that is so beneficial to Bitcoin and just rises that demand so high. I don't think people can comprehend what that looks like yet.
I like the sound of that. Ben, it does make a lot of sense. I haven't thought about that before. But as you're saying, there are companies. Are you laughing, Ryan? So once again, I just want to say I can't see the chat. I'm sorry, guys. I can't throw it on the screen for some reason today. It's not feeding into my restream. I'm totally bummed. It's a really important and fun part of doing a live stream, but I can't see it, so I can't throw it on the screen. Want to go back to what you said, Ben, that as you're saying, there's different companies. There are companies that, like Microsoft, that actually have a very large cash flow, so they can do different types of bonds. You call them fixed income, right? That actually have a coupon on them, that where they're being paid, and would be great if some of those started happening as well, so we have more than only Sailor as that gateway between the gigantic legacy bond market and Bitcoin. We just want to like suck in a random, say, $300-400 trillion into Bitcoin, and then each Bitcoin will be at around 25 million or something. I don't know. It all happens at the margin. We don't know. Ryan, your thoughts there, potentially?
Bro, I mean, I don't have any specific thoughts on this whole like big, broad, like bond market landscape. I think the last portion that I said about, you know what I mean, these are the best performing corporate bonds in America. Period. End of story. So it's like, like this question of like who would buy the corporate bonds? It's like the real question is like, who would not buy the corporate bonds if they're a corporate bond buyer, right? Going back to the story of the gentleman on the phone that I had a conversation with, he's like, of course they're going to want to buy this stuff because it's just a Bitcoin proxy for people who cannot like take a Bitcoin proxy. And I think this goes back to Jeff shared this kind of stuff like, I don't know, 2-3 months ago, 10 weeks ago, something like that. The Finland bank and the Swedish bank took a position in owning MicroStrategy stock, the underlying, not the bond. And so forgive me for getting away from the bonds for a second, but that's just kind of
okay.
It's just kind of the broader point here where like they're not buying IBIT because that has the word Bitcoin directly associated to it. So they don't want that to be like a check against the state or like a checkmate, which I would say against the state. They're just like, hey, we're just buying MicroStrategy stock. It's just a company. And believe it or not, and Anders, you'll love this. Believe it or not, I was hosting a space like, I don't know, a month ago, 2 months ago. Again, time is a fake concept, but I was hosting a space like recently over the past months with Yellow of all people, the Oracle of Truth. If people don't follow or understand Yellow, Google him because you'll understand him one day. And he comes on the space and he just goes, hey, maybe people are just buying this as a way to get Bitcoin exposure because it's not Bitcoin, right? Like it's not big. It's just a company. It's just MicroStrategy. It doesn't have like the IBIT title of this is a Bitcoin spot US ETF. This is just an operating company. So I feel like that concept ties into this whole bond market question of like who's buying this. It's like who wouldn't buy this if you're a buyer of corporate like US bonds, you know what I mean?
Totally. You could say it's well, I can just imagine like with the things you're saying, right? So there's a young guy sitting in the Finnish National Bank and he's buying MicroStrategy stock because he knows it's the Bitcoin upside. And then the manager of the Finnish National Bank comes over and like, yo son, what's this MicroStrategy you've been buying? It's just like it keeps blowing up and going up in price. You're not into like getting into some of that Bitcoin exposure or something. No, sir, it's like a NASDAQ tech company. This is business intelligence software that I just really believe has a future. So you got scenarios in the what is MicroStrategy?
MicroStrategy.
MicroStrategy. It's just it's a software company I invested in that just keeps blowing up. And then
I think it's Norway and Switzerland, by the way, just to clarify that. So
all right.
I think I saw that in the chat too. So Norway and Switzerland.
Right. And
one thing,
guys you got to say if there's something good in the chat, you guys mention it because I can't see it. Go ahead, Ben.
Yeah. One of the other things that I kind of want to call out because there's a lot of talk about this, Saylor and MicroStrategy, they kind of get pegged as the degen company, right? Like they're doing this wild leverage thing with Bitcoin, but you got to look at it this way, right? Say their Bitcoin is a house, right? They're taking out a 25% mortgage on the house. Anybody you knew who bought a house that took out a 25% mortgage, you would think is being wildly, wildly conservative, right? So everyone running around talking about how degenerate this play is, and he's betting the house on this. Like he's taking out a 25% mortgage on his house. That's hardly a degenerate level of leverage. So I think that that's an important thing for people to realize. And yes, obviously Bitcoin fluctuates in price, but he's not exactly starting, close to the top here. He's not levering up 80, 90%. So a 35% drawdown doesn't even bring him close. But beyond that, I mean, Ryan brought up one of his favorite topics, which is IBIT. And the one thing I do look at with IBIT and the IBIT options before Ryan tears them apart, but the one thing I do look at there is we've got to recognize a different type of model too that doesn't involve leverage and bonds, right? And that's just converting treasuries into Bitcoin. And that's where I think IBIT is really going to play a part. I don't think there's going to be a lot of companies that are going to be looking for self-custody of their Bitcoin because I don't think that they want to go through the hassle of learning how that works or finding the right custodian for it if they can just use their own traditional brokerages and go buy exposure to Bitcoin through IBIT. And I think one of those big holdups for them wanting to do that is at the moment, if they buy IBIT, they're unhedged, right? There's no way for them to protect to the downside. So they may look at, all right, we'll convert our cash in our treasury over to Bitcoin. And that might be as far as they go, which is great. And I would applaud that too. And now if they really wanted to, they could start implementing some managed hedging, right, where they stay, long the asset overall, but they're capping the downside on it if they're nervous about it in the beginning before they really understand it. That's where I actually think the ETFs and the options for the ETFs are going to start playing a point. And I do think that it's going to be something that does bring a lot of that institutional capital into the spot Bitcoin market as well. I think that's going to be the onboarding for the more conservative groups that don't want to go and try to play the, let's become a black hole for institutional capital, that just want to say, we just want to convert our cash. We want to get rid of this inflation risk that we don't know. They tell us their targets, but what's the real, devaluation of the dollars we're holding? And they want to get out of that cycle and start looking for some alternatives. That's where I think IBIT and the IBIT options market does actually have a fairly decent impact to the underlying spot price of Bitcoin.
Gotcha. Ryan, any thoughts on that, or
I bet he's got a few.
Yeah, or if you want to segue into anything else. Otherwise, I have points here we could hit, but if there's something you'd like to add, then go ahead.
If you don't mind, I'm gonna try and share my screen here, if that's okay. Can we see the screen?
You got it. Yeah. Yes. You said that earlier.
And then I'm of course happy to go into the questions from that point on. But just from here looking out, this is an article from CoinDesk from a real person that I would just like to unpack in a friendly way, if I may. You know what I mean?
The floor is yours, Ryan.
If I may, thank you, sir. If I may,
you may and you shall.
So right here at the top, MicroStrategy's current premium. Any equity analyst who is worth a grain of salt, shout out grain of salt, but any equity analyst who is worth anything knows to value things in the future sense, right? And we can debate how far out into the future people should be looking on these sorts of things. I'm, of course, much longer out in the future than like most people are. And we can debate those time horizons. But this whole narrative, like, here's the reality. Here's the real thing I wanted to say on this show. Here's the reality. The people trying to like associate a value to MicroStrategy in today's, like, right now, how many Bitcoin do they have on the balance sheet and like what is the price of Bitcoin? That is like canonically the wrong way to look at this. That is just so empirically the wrong way to look at this. We shouldn't be looking at MicroStrategies having 252,000, Bitcoin. We should be thinking through them as the option of having 500,000 Bitcoin or perhaps 1 million Bitcoin. And then over that duration that it takes to gather 500,000 or 1 million Bitcoin, what is the price of Bitcoin at that point? That is where the conversation should be focused. So this whole guy, like Will Canny, I'm sure he's a great guy. I mean nothing against him personally or CoinDesk or like whatever the stuff is, but I am going to torch it royally. So it's relative to its, like, look at this, relative to its Bitcoin stack. These people don't get it. They never got it. They never understood this thing even in the beginning, right? When it was just me and Mark Harvey, when I had 500 followers, a year ago, and I zero notifications and zero messages of people trying to talk to me. I was just talking to my absolute boy, great friend of mine, Mark Harvey, wonderful person. I was just asking him questions about MicroStrategy, and they say and this article has the audacity to be like relative to its stack. Well, where do you think the stack is going? Do you think it's going lower from here? Do you think it's going to stay the same from here, or do you think it's going materially higher from here? And that's where like actual equity analysts operate, is in the future, not today's crap. We operate 24, 36 months at least in the future. And then that's like where I said we can debate about the time horizon as in regards to like how far in the future are we going to discount this stuff. But if you're looking at today's numbers, it's like you've missed the plot, and you're like at least two years behind. So that's the title. And then let me tell you something about this first line of the article before you even get into like whatever like video crap or that they're gonna like advertise on the site. Let me tell you something about this first line. These are the same, like, can I speak freely? These are the same.
Please speak freely, completely.
Thank you, sir. These are the same types of delusional morons who thought that like IBIT as a spot US product was going to compete like with MicroStrategy, the stock, as a spot product. And I've been through these battles. Ask Fred Krueger about me. You know what I mean? Ask all these other guys about me. I was in these battles in the trenches 12 months ago against all these guys saying like, oh, MicroStrategy's now, you know, worthless or obsolete or all these other stupid words that they wanted to assign to it because there's now a spot US Bitcoin ETF. And the fundamental flaw that those analysts had and still have is that they think of MicroStrategy as like just a US spot Bitcoin ETF. Like, are you out of your fucking mind? Period. End of story. That is my question, because we have a visionary chairman. We have an operating company. We have like the Amazon of the capital markets. Like we have a dominant monopoly type position here. And yet these people wanted to be like, oh, well, hold on. They wanted to be like that meme where it's like, hey, honey, I found something all the scientists have missed. IBIT is going to be a product soon. The Quant Bros and True North and Ben Workman, they must have missed this in their analysis. It's like, no, that kind of stuff is ultimately going to disproportionately benefit MicroStrategy way above the field. So that's kind of the first point there. And then, you know, we come down here above this, below this video, MicroStrategy at 300% premium to its underlying holdings. Again, it's just the same crap that I've been talking about. The positive effects of the company's stock split, like this is the kind of stuff these people like they just fail to understand. Like many equity fundamental analysts, they just look at one catalyst in a vacuum, like a stock split, like which I've highlighted right here, and they think of just that in a vacuum. It's like, what the fuck are you thinking? Like, what are you even talking about? It's never just one catalyst or one thing in a vacuum. It's all of the things compared against all of the other things of all of the other investment opportunities. So it's like, what are you even talking about? Talking about just like one aspect, like the stock split. And then it's like this stuff here, like whatever. If Donald Trump is reelected, like this stuff is just such crap. It's 100% crap. And you know what they're gonna say now? What they're gonna say now is like, oh, like MicroStrategy options, like perhaps people don't want to hold those because the almighty BlackRock, Larry Fink of all people, is gonna come through and finally have an options market, which that's another thing we haven't even talked about, right? Normally when like a new company IPOs, within 2 weeks, such as like Coinbase back in April of 2021, within 2 weeks of a company IPOing, they'll have an options market traded. This shit took 12 months and we still don't even have it. And like no one like talks about that or cares about that, blah, 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 but they're behind on the trade. Here's the thing that these people don't understand. And can you still see my screen? I changed it.
Yep. No, we got it. Yeah, we see X now.
This is the thing that these people do not understand. And quite frankly, they will never understand this stuff in their entire life as long as they live, right? The call skew, the existing call skew, which means to the extent that people believe in put call parity, what that is it suggests an idea that the out of the money puts and calls for any given underlying should trade at the same price. I don't believe in this stuff, but it's one of those like efficient market hypothesis type things that the equidistant 10% out of the money, 20% out of the money puts should trade at the same price as 10% out of the money calls, 20% out of the money calls. I've never once like ever believed in that stuff, but here's the thing. Let me close the chat here.
Yeah, I did see it. but I was thinking, yeah, I don't think there's anything that would be problematic. But yeah, that was for anyone who missed it, that was our like internal chat there on the screen. Anyways, go ahead, Ryan.
It just happened to be up there. I wouldn't have showed it.
Dude, there's nothing there. Why not? We get that. This is what adds entertainment to the show, Ryan. Keep it up. Okay, back to your point.
It's all open source stuff, folks. We're not holding any secrets here. We're coming on TV to try and talk about this actively. But yeah, the call skew is so massively skewed to the long side of both short dated options contracts and long dated options contracts. Like we can look at this one right here. And
you're going to explain what if impact that's going to have, Ryan, right? For most of us that don't know what that means, you're going to tear that apart now, right? Skew.
And I really don't want to like walk through like the specifics of like this one's better on like the longer dated stuff. Percent out of the money calls or 2x more than 40% out of the money puts, and then it ascends from there in like a very like linear direction as far as like the calls being worth so much more than the puts. Here's the main thing, and I'd be happy to like run through these numbers in like more detail. I just don't want to like bore people to death. Here's the main thing. I was in on the Tesla long squeeze. And I've been a student of squeezes, both to the upside and the downside, like the boom bust, Soros, Druckenmiller, like that whole like school of thought. The one thing, like if I had to pick one singular thing that exists in every long squeeze, whether it be Nvidia, Tesla, Bitcoin, MicroStrategy. If I had to pick one thing that exists in every long squeeze, it's a massive call skew to the upside, where the market has priced through the bid-ask spreads of all of these options. The market demands a higher price to be paid for long exposure versus short exposure. I think that's the best way I can say it there, and I'll pass it back.
So is that the do you want me to move the shared screen, or you want to we can let me know as soon as you want to put something back on the screen again. What was the thing I wanted to say to that? So this skew you're saying potentially can lead to the squeeze because there's people that's going to have to cover their opening the longs, like selling, like basically taking the short positions, or what are you saying that these skews will have of impact?
Well, I think number one, the key point there is that like the Mike Alfreds of the world who are talking about like, oh, these are overly excited kid analysts because all of a sudden, honey, we found something that the quant bros have missed. IBIT options are coming out. It's like, no, you're fundamentally wrong. Number one, that's the first thing. And then the second thing there is like nobody's going to be transferring out of MSTR call options, which has all of the upside, to just buy into like a regulated Larry Fink IBIT options product. Sure, some other people are going to come into that, whatever, who cares? But it number one point there is like that broader concept that like nobody cares about IBIT options, number one. And then number two, the point there is that every long squeeze that I've mostly ever studied, right? Because I was only ever in like one long squeeze with Tesla back in 2019. But all of the other long squeezes a la NVIDIA, they all had like an overwhelming long demand for call options, both in the short term and in like the 1 year term, 2 year term. It was all massively skewed towards the long side versus what you could buy for the equidistant puts. So I think that's the 2 points there.
All right, thanks. Ben, do you have something you want to comment on that or add to that, or?
And Ryan, I was waiting for him to tell us that here's the reality. I knew it was coming. I didn't know when, but I was waiting for it. And I think companies are missing out. I mean, if you wanted to get a bulldog on your staff that's going to get out here and drop some reality on people, they need to call Ryan, because this dude's got a gift for it. I don't have that gift. I'm the low baritone voice that just kind of goes. But no, I think early on when Ryan was looking at, all these articles that come out, and people do really try to value MicroStrategy like it's an ETF, and they look at that multiple to NAV, and I think that they're missing, several things. Ryan laid out one of them, which is the forward looking, and you're trying to price in how many Bitcoin you think they're actually going to get to. And so you're future looking in that aspect. The other component of that is you got to find a way to value the volatility of the equity. And the reason you have to be able to value the volatility of the equity is because so much of this liquidity that's trading back and forth on a daily basis is these massive institutional players that are putting on and taking off their hedges all the time, right? If you look at just how many shares,
like Grain of Salt and all of these others, big institutions.
Not even
just
that.
Kidding.
But yes, I mean, to be quite frank, the people that we've met that are trading huge amounts of MicroStrategy options underlying, just that you'll find on X that you'd never expect, is staggering. Like, it's been a real eye-opening experience to find out how many people are so deep in this trade. But a lot of it is when you look at like these people that own these convertible bonds, right? That delta hedging goes on all the time. So there's this liquidity that's happening anytime that the price is moving up or down, right? So as the price runs up, yeah, these guys have the ability to kind of dampen a spike to the upside only to a point, because once they become fully hedged, they've got no more hedging to do. But the same thing goes the other direction. The stock price starts going down. They start buying back their short positions, right? So they can dampen the downside as well. But that movement, right? What you're trying to value is what value do these institutional traders put on a stock like MicroStrategy? Do they really care what the price is at and what the multiple to net asset value is, as long as it's moving, right? They need it to move. They need it to go up. They need it to go down. And that's part of the reason why, when I look at this and everyone starts getting really euphoric on all these run-ups, which is great because it's really, really exciting to watch this thing happen, you do also have to understand that the whole design of this thing is to move in both directions, right? It's going to be amplified up. It's going to be amplified down. I think the thing everyone tries to time is how extended is that move up going to be, right? And part of that's tied to Bitcoin, right? When do we get a really extended run in Bitcoin versus when does it reverse, right? We always get those 35% corrections in Bitcoin bull markets. So you're kind of waiting for when does something like that hit where that volatility cuts the other direction, right? And these big players that are trading the shares day to day on these exchanges in huge volume, they're the ones that are valuing that component of this stock, which is a different type of valuation than just looking at a multiple to net asset value. I kind of view that as a very retail or ETF minded valuation model. And people need to start thinking a little bit bigger on this, because when you do start to really get a concept of how much capital is out there on the sidelines looking for somewhere to go, you've got to start figuring out if MicroStrategy stays the only name in this, right? If a bunch of other players don't jump in and give other offerings for these guys to participate in, these guys are going to be pushing their doors in to try to get into these trades because they want to be the ones that are locking up these things. So I have a hard time figuring out what a multiple is going to look like, because quite frankly, I think multiple to net asset value on something like this isn't really the right way to look at it. You have to look at the bigger picture of the size of the capital pool on the outside that's trying to get in here and what they're doing. And if they're successful in bringing in some of these other companies and getting them on board to do this, it just ramps up this flywheel and makes it that much more valuable. So they're going to be one of the big names because of the size they're achieving, and their Bitcoin, the more Bitcoin they have, as price moves up, like we talked about earlier, that fair market value expands on that, and therefore their leverage can expand on that, and they can keep going bigger and bigger and bigger. So it's a fascinating one to try to value, and I think people are going to be arguing about this forever. But the reality is you got to try to, really tie all those factors in to come to some type of a number.
Yeah. And it's a lot of factors and exciting. I think we've also been talking about a lot lately is obviously all these bullish catalysts that are going to happen for MicroStrategy that are not going to happen for IBIT or any of the other ETFs, and naturally the index inclusion and the index readjusting of the value, which when the price goes up for MicroStrategy means they'll buy more, so it'll further push up. And I was thinking the other day, the beautiful thing with these indexes, of which QQQ is the likely one to be triggered 29th of November, and then it goes into effect mid-December. That's beautiful, Ben. That you got some light there. We could actually that you no longer look like the dark knight in the Batcave.
It's funny because I didn't change anything, so I don't know what happened.
Oh, really? Must be the camera.
Just
must
the
be the
universe
camera
saying, "Pull it together, Ben." Turn some lights on. But
it's
you
the
should all
camera
know you
adjusted.
don't turn on your lights when we're in a bull market. You buy more Bitcoin, you don't pay utility bills.
That's it. And once you turn the light off, that's when anyways, what I wanted to say was like QQQ which is the first one, and S&P 500, which is likely to happen next summer. They don't have any feelings when it comes to the MNAV, for instance. They don't care if the MNAV is 10 or 3 or whatever it is. Indexes only have a buy wall. There's no feeling. So there's just so many of these upcoming that makes the next 12 months very interesting and exciting for MicroStrategy. And again, I'm not saying that, I mean, to me, it's very interesting if it can outcompete Bitcoin, but I'm not saying that it should at all replace Bitcoin in cold storage in your portfolio. I just think for the thought experiment, MicroStrategy is the most exciting corporate story that I think I've ever seen, and we're still in the early stages where it is just a few people on X kind of almost that are like seeing this is actually more than just an operating company making $70 million a year stacking sats and then it's diminishing returns because now the price ran up. No, it's something else. That's that the MNAV premium is rocket fuel on the Bitcoin buying rocket of MicroStrategy. And when that gap is there, They fund it either with convertible bonds or with ATM. Yeah.
Which
And
is another part of the strategy we haven't even talked about, right? I mean, I'm expecting, and I don't know what they'll ultimately do, right? I mean, it's not like sailors calling me to ask for suggestions, but I'm almost looking for them as we get into this bull run. If we're looking at Q4 and things really start ramping up here, I'm kind of expecting them to open like a massive ATM, right? Like a $10 billion ATM. So that if we get one of these wild spikes where, you know, this MNAV, which whether we pay attention to it or not, he certainly does, right? Because he views that as that arbitrage opportunity. And so if he opens up this monster ATM just to be available for the bull market, right? He can drip it out there for a while, but if we get one of these spikes or if we get one of these squeezes, you know, Ryan's talking about the call skew and the potential squeezes that brings, if he doesn't have the funding available, he can't capitalize on the event, right? And obviously Saylor's going to have thought that part through. So I'd be expecting him to have a very outsized, I mean, we saw a $2 billion one, but I'm expecting, you know, a $5 billion or a $10 billion, because in the event that we get one of these squeezes and this thing pumps to a 8-10 times net asset value, that is crazy accretive, but he can't get a convertible bond out in enough time for a squeeze, right? I mean, in the event the squeeze turns around, who knows? But so he wants to be ready to capitalize and buy huge amounts of Bitcoin when their stock price way outperforms Bitcoin. So he's got all these different setups that he's got to be paying attention to as we go into a bull market that make him so flexible in this strategy to make sure, you know, there's people already worried about in 2025, can he hit a 4 to 8% Bitcoin yield? Well, of course he can. If you've been paying any attention, like, I mean, he's got so many, all he has to do is go hit this ATM. As long as they're trading above 1 times, it's accretive. So of course he can hit it, right? That shouldn't even be a concern. 4 to 8% seems crazy low. I think they'll go way higher than that.
Can you hit it in the morning?
Whenever
NASDAQ opens, of course.
Yeah, right, probably. So
just gotta get that market open.
Yeah, that's right. And all day long, right? He can just keep it in this ATM. So I don't know. I think that we get into this bull market here, and I think all bets are off in terms of how much Bitcoin he can accumulate. And to Ryan's point on how do you value how many Bitcoin they can accumulate, well, I think everyone's greatly underestimating how quickly they can buy this Bitcoin.
I need to ask you a question there, Ben, and that is because what you were saying.
You gotta pull it together
on a
over
serious
there,
note.
Ryan.
On a serious note, to what extent are we aware of what Saylor already has been granted authority to do in terms of amount of shares to sell ATM?
Yeah, so they approve it in dollar values, right? So he approved the $2 billion before. He's got about 890 that he hadn't used as of the last reporting. So we'll probably get an update here on Wednesday. And then if they come close to exhausting that, my hunch is he reloads that right away, opens up a new one.
Let's go. Yeah, we want to see some bigger numbers, not the rookie numbers. 2 billion, that was for the bear market. It's time to ask for $20 billion ATM authority. I mean, what is there to lose, right? Just give him the tools at disposal, because that is the bazooka you're hunting the long squeezes with, right? When you get that crazy spike up, you want to have the ATM bazooka and capitalize on that, right?
Yeah, I mean, the options holders hate it, right? Because you get these squeezes going and you hate the fact that it's possible that the person that's killing your squeeze is the company. But he's got a directive, right? His directive is his shareholders want more Bitcoin per share. And when that becomes really accretive, he's going to hammer that thing. So you got to be aware of it. And it probably means that when you get these squeezes, you do have to eventually think to yourself, this balloon's going to deflate eventually, because there's no way Saylor's not going to be capitalizing on this if he has the tools at his disposal at the time to do so. So there is a limiting factor there that the options guys are going to hate, but it's a reality. So we got to pay attention to it.
Can I hop in here? We have and I know Anders can't see the chat, but I can, and we have Josh Murphy here, who said, yes, us old farts can still hit it, but only in the morning. For those who are unfamiliar, like young men, listen up. J. Cole, white wine or champagne, you know, the party lasts throughout until the morning after. That's just a fun side fact there. But the real like serious point that I want to drive home here, again, you got guys like Ben and Jeff who are going to talk about like moon boy math, who I hope I'm on the moon with them, but I'm not quite like there right now. They're talking about like moon boy stuff. Ben just casually talked about $5 to $10 billion in one round of you know, convertible debt or like whatever it may be. The market cap of MicroStrategy 4 years ago was $1 billion. The whole enchilada was worth $1 billion right before they had started, you know, the Bitcoin journey. And then in March of this year, when me and Jeff and all these other guys were battling against Fred Krueger and the like, we were selling $1.1 billion worth of convertible bonds in a single round. Just 4 years removed from the company, from the whole enchilada being worth $1 billion. So I just said all this silly stuff just to drive that point home about how like non-linear this change is. That you have like a real CFO type character, like a chief financial officer type character, such as Ben, in like serious terms, like legitimate terms, talking about, you know, $5-10 billion, you know, debt financing rounds. The whole enchilada 4 years ago was worth $1 billion, and now we're talking about these numbers that are so much bigger. Like that's just one aspect of like the hidden non-linearities that are present with us in MicroStrategy. You know what I mean?
Well, you want some more game theory bull fuel on this one?
Let's go.
So, say you're Sailor, right? And you've got these ATMs and he's putting out these $10 billion ATMs. I've been thinking about this a lot recently. So once they start getting into these indexes, you know when these indexes rebalance, right? And these indexes are all driven by market cap. So with the ATM, what he gets the ability to do is issue shares out into the market, but he's not losing any value to the enterprise with it because he's buying an asset and putting it on the balance sheet. So imagine he gets really strategic here and he goes, I'm going to issue a massive ATM in advance of these rebalancing events for all these mega, you know, NASDAQ 100, S&P 500 when they're in there. And what I'm going to do is before they go and take their snapshots to rebalance, I'm going to go drain a 10 or a $15 billion ATM out into the market, boost my market cap way up, get myself a higher allocation in all of these funds. And now you've got to bring more of that passive money into my company, right? I mean, that's a legitimate thing he could potentially do. I don't know that they're going to do that. I'd do that, right? I'd be certainly considering that because if I know that that's the mechanics of it, and you've got all these different triggers for all these different indexes out there, all these different snapshot dates and rebalancing dates. If they start getting really strategic about that and doing these ATMs in advance of those cutoffs, there's a scenario where he just keeps pushing the market cap higher and higher just by issuing the ATMs without taking on any additional debt, right? That's just clean Bitcoin to the balance sheet, right? More shares. But it doesn't tend to drive that share price down as much because it's a 1-for-1, right? He's issuing these shares over here. He's taking that value. He's buying Bitcoin. He's putting it on the balance sheet, right? So he could start gaming the system here and just draw those zombie funds into the company. So I've been toying around with that idea and trying to figure out what the heck that's going to mean ultimately. But to me, it seems like a pretty great idea. They got to get into the indexes first, obviously, before they can really capitalize on that. But I'd be surprised if they're not draining their current ATM just to get those shares out there into the market, which will boost their market cap number. And they're kind of creating the market cap that they want. So just a fun thing to think about.
No, that is not only fun, it's a lot of fun. It's also interesting and a great point that by selling more shares, he can inflate the market cap. No, now they got to buy more. And I guess he can kind of not manipulate, it sounds negative, but I guess help stimulate their buy wall and the size of their buy wall so that when he wants to sell more ATMs, he can do so. He can create that higher buying pressure so he can take more advantage of it and buy more Bitcoin for the company.
Well, he's creating that space for the leverage, right? So he goes and, takes $1 billion with the ATM. He takes that Bitcoin, which shifts right to the balance sheet. Now he's got a higher fair market value of that Bitcoin on the balance sheet. Now he's got more room to be leveraged up to 25%, right? So if he goes and does it with $10 billion, now he's got $2.5 billion of room in that leverage ratio to go out and issue more convertible debt, right? So not only did he buy Bitcoin with the ATM, bring in $10 billion, now he issues another $2.5 billion of converts and he goes and buys Bitcoin with those, right? I mean, it's just this cycle. And I don't think people are wrapping their head around just how crazy that is, right? I'm having a hard time wrapping my head around how crazy it is, but it makes me really bullish about what this thing looks like because I think there's a level of financial engineering here that people just are not comprehending yet. And I really do think we are really, really early to this discussion, really early.
And you're adding a lot to it, Ben, because your way of thinking here and the financial instruments that you have particular knowledge of is adding a lot to this, and that's why I love doing these MicroStrategy Mondays, of which this is the second. Watching MicroStrategy True North on Wednesday, and just I watch every episode of, and I can't see the chat. It's super annoying. You guys feel free to quote the chat because I'm sure it's great. I'm the only one not like in the whole world right now that can't see the chat of the people watching. But no, it's super interesting, and the whole narrative around how this is going to play out is just being created now as we speak. Yeah, Ryan.
Give us the reality, Ryan.
Can I hop in on that?
Yeah.
I feel like it's
yes.
Here's the reality. Here's the reality about MicroStrategy on a go-forward basis that seemingly no one has the imagination worth comprehending other than Jeff, Ben, and a couple other characters on the internet, is that there is an unlimited amount of optionality on a go-forward basis. In addition to all the things that we know that we can do in the capital markets, which, by the way, MicroStrategy and Saylor and none of these guys even were thinking about this 4 years ago. In August of 2020, when they first bought their first, 21,000 Bitcoin, it was purchased in a defensive manner. They weren't thinking that they were going to outperform every single company in the S&P 500. It was a defensive type maneuver. And then they learned more as they go in the exact way that all of us idiot analysts on the internet are also learning about these future forms of optionality on a go forward basis, right? All the stuff that Ben talks about in the convertible bond market and should we sell shares at the money here and all of this stuff that takes us through the entirety of the gold rush era, which Saylor laid out, which is basically these next 10 years. The thing that can happen at that 10-year mark, call it 2034, 2035, whatever. The thing that can happen at that point is there is no limit to the value that can be created through Bitcoin per share through the mechanism of splits and buybacks, right? So if we test these ideas in the limits, which by the way, people want to test certain ideas in the limit every single day. When I have a space about MicroStrategy, they all want to talk about 6102. That's the first and singular topic on their mind is 6102, but we don't think about the upward potential there. And it's like, given a successful future for both MicroStrategy and Bitcoin, and perhaps MicroStrategy's ability to like increase revenue and earnings, and or the optionality of acquiring other companies that can provide cash flow to the main hub in the exact way that Berkshire Hathaway has done for the past, 50, 60 years. There is literally no mathematical limit to how high Bitcoin per share can go. There is none. Because given that successful future for MicroStrategy, we can never buy back all of the shares. We can't, because we can just keep splitting them, and that's a non-dilutive like round, right? It doesn't dilute any of the shares. It just splits the shares. It's the pizza pie example. It just splits the shares into tinier and tinier slices, but it's a Zeno's paradox where we could just keep buying them. Other large high net worth individuals can just keep buying them forever, and no one entity, nor all of the entities combined, whether it be the Bill Millers of the world, like actual high net worth individuals or hedge funds, or MicroStrategy, the company, we could never buy back all of the shares. We just keep splitting them and buying them back, splitting them and buying them back. And that's how Apple was. I have this like great chart on a post where it looks like a giant X crossing. All of the shares of Apple Computer, they decreased by about 40% over the past 15 years. And Apple stock over the past 10 to 15 years has went up by a factor of almost 20, while being the biggest company on planet Earth. It just kept going up. So that like split and buyback functionality, and look, I know that's like a long-term type thing, but it's just to explain like the forward-facing future optionality of what this company has, right? Both in terms of all of the things that Ben has listed out brilliantly in terms of like the here and right now, but then like on a longer future basis, like there's just unlimited optionality in terms of value creation here.
Yeah, absolutely. And all these amazing tools to suck in that legacy fiat and clean it up and turn it into Bitcoin. It's a washing machine, micro wash. Not money laundry per se, obviously. I'm not saying that.
Yeah, we might need to be careful how wide we run with that one, but yes.
Yeah, it's just as we said, it's entertainment and self-education, definitely in this zero financial advice here. But yeah, no, obviously it's very over the counter, I believe, what is happening. There was something, Ryan, I am, as I said earlier, watching, pretty much trying to consume and learn from all the MicroStrategy content I can come across. Also watching MicroStrategy Daily by Matt. Would be good to meet him one time as well. And I noticed, Ryan, so this might have been on one of your spaces though, actually, where you mentioned a future date. It might be the one in January with that large expiry date coming up, a very large expiry volume on options, where you said there was a date where you said at that point you would expect to de-risk somewhat. Can you just, I'm curious when that was and your words on that, thoughts.
Yeah, so here's the bottom line with all that stuff. I'm never selling the underlying stock. I know I've had a lot of conversations with Grain of Salt. This stuff always ends up coming up when he's like, yo, when you have life-changing money, sell 20%, do all that stuff, take care of your family, all of those things. And if the options market did not exist, I would follow Grain of Salt's advice like to a T, right? And look, I'm not saying that like my school of thought like means anything, because again, this is not financial advice. I'm not trying to be anyone's financial advisor or any of that stuff. But I'm never selling the stock at any price, especially because I can deal in the options market and generate like the fiat returns that I want in order to buy myself a house, buy my parents a house, make both of my sisters' college debt just disappear, which they keep like, I keep telling them this, like I'll make the $80,000 balance go to zero tonight. And they keep like holding out on me for whatever reason. But that's the reason I'm dealing in the options market, right? Is that I can still generate like those cash type, like realize the profits type idea in the options market without ever having to sell from my core equity, because I want to be a large holder. I want to be one of the largest, who cares? But I want to be a large, like, individual shareholder of the underlying. Like I actually want that, and I'm never selling at any price, because I can deal in the options market and like realize, you know, actual fiat capital gains in that establishment without ever having to touch my underlying stock, you know?
No, I get it. So, actually, Ben and I were talking about this before you joined the green room, Ryan, that of course there's different ways to invest in MicroStrategy. There's the underlying, and I feel the same way. The actual stock, I don't see any reason to ever sell that, even if in the bull market MNAV goes high or whatever. The MicroStrategy stock I have, I would like to sit on. And then a little bit dabbling in some of the leverage, and whenever that hits a certain amount, a percentage of my portfolio, I just sell, and then put that over into the underlying, aka MicroStrategy stock, which I don't ever want to touch either. That's just, you know, for the grandkids, what have you. Ben, I know you have a hard stop sometime. I don't know if you want to add to this conversation here, and you just let us know whenever you got to go. You got to go, of course.
Yeah, I got to jump here in just a minute, but yeah, I would say the leverage positions. You know, this happens every time MicroStrategy rips, right? People start getting really interested after things have ripped. And I know that within the group of people that I talk to, I'm probably the conservative investor, believe it or not, within our group. You know, like I was trying to talk grain out of going heavy into all these leverage products and things, and I'm begging them, like, just cut fast, right? When you make a ton of money on these and they run, start trimming, right? Because you don't want to ride it the other direction. But so far he's been right, I've been wrong, but you know, I'll own that. That's fine. But I do look at it, and I think you've got the right approach, Anders, which is you're just setting a fixed amount in your portfolio, and as soon as it's above that, which can happen really fast, you start capturing that value and shifting it to something else, right? Shares of MicroStrategy, right? That's the only thing we're talking about here. So, you know, I think that's great advice for people to hear, because everyone wants to think that they're going to ride the leverage products through 2025. You know, while Bitcoin has a blow off top, the reality of the leverage products is they're amazing if you catch an uptrend, right? And so far, since they've launched them, we've caught an uptrend, right? So everyone's feeling great. They're making money hand over fist. But we got to remember that the bull markets have all been very similar, where you're going to have these 35% drawdowns in Bitcoin, which probably means MicroStrategy will draw down, you know, well, it's actually been outperforming to the downside, which has been kind of crazy. That's I know Ryan's posted about that a lot, so that's been nuts. But the leverage products, you've got some real downside there, where that value can get cut in half fast. And so you do have to have a plan for that and how you're going to execute on that when you do start having these massive gains. So I do think that's an important thing for people to consider, is make a plan early so that you stick to it. Because if you don't, you'll just be thinking, you know, the next day it's going to turn around. And remember, this thing compounds daily. So you can find yourself upside down here in a hurry. But I appreciate you having me on here, Anders. You've got an awesome show. I love that you invited me to it. I know you've got me on some of the other ones as well. I'm very happy to keep joining this. This has been a really, really fun conversation. I'll jump on here and chat with Ryan any day. I love getting a dose of reality from him every day. So really great thing. Thank you for having me, guys. And I do have to run now, but I appreciate it.
No, definitely. But thank you so much, Ben. And as you already know, but I can tell the audience as well that it's you two, Ben and Ryan, and then Jeff have a standing invitation for MicroStrategy Mondays. I do consider you, from what I know so far of people I've listened to, as the foremost experts on looking at MicroStrategy, not only as a company, but the financial tools, convertible bonds, the ATMs and all that. So your insights are so valuable, and that's why I hope to see you, I mean, every Monday, but that's a standing invitation. And then we'll get some other guests also coming in and saying hi every now and then. Will be fun. If we can get next Monday all three of you on at the same time, that would be great. But yeah, thank you very much, Ben, for being on, and I hope to see you next Monday.
Absolutely. I'll make as many of them as I can. Appreciate it.
Awesome. Thank you. All right. I think I just like that. And then there was two, Ryan. So this is the after party now. Oh, what?
This is it. Now we can have fun. The adults are gone. Now we can, now we can party.
All I got here is the San Pellegrino. Well, here in my hand. But yeah, that was fun so far, and educational. I had some more things written down. You already answered the moment you were thinking about you would de-risk not the stock, but some of the options positions would be around January, right? That was the timing you were thinking of.
Well, I mean, for me personally, and again, this is such a personal type decision. I'm looking to buy my first and only house like this time next year.
Nice.
So I'm definitely not caught up in the having to exercise or having to sell around January. All of my options positions are like well long dated beyond that.
Mm-hmm.
Because I think the risk with like right now buying those January, February, March, April of 2025 call options is that you miss the front running of the S&P 500 of next year, and I want to be fully exposed to that whole thing, and I'm okay with like buying extra time value as I did today. I'm okay with buying extra time value on like longer dated stuff because I can sell those things or exercise them, but I can sell those things with 3 or 6 or 9 months left on the contract and still be paid for that time value. So it might not be like the highest asymmetric outcome, but I'm still going to be paid for that time value on the back end,
I always prefer the options that have the most time value, which means the furthest out for expiration. Because like just in case things are delayed or something happens, it's just nice to have that more time that you don't have you're back against the wall on those things. Ryan, do you have some thoughts on MicroStrategy navigating through the bear market? When I say the bear market, we don't know, of course, but if this cycle is to continue, then Bitcoin tops Q4 next year, and then we're going to have 12 months of sliding down. Like that would be a continuation of the cycle, which we don't know if it will happen or not. But do you have some thoughts or ideas about how MicroStrategy would navigate the bear market? Are there some things, some tools at their disposal that they can benefit from it? Or like, what's your thoughts on that? Like MicroStrategy and bear market?
Yeah, so I think all of the options are on the table. You know what I mean? Number one being, are we going to go into a Bitcoin bear market? That's like the first question, right? Because if people subscribe to like the Samson Mao theory of Bitcoin, like cycle theory is over. So even just talking in terms of like cycle theory and election theory, which is so directly intertwined to the Bitcoin having seasonality, like it's no surprise that the 2012, 2020, etc. peak prices of Bitcoin happened exactly 1 year after the presidential election, which just so happened to line up with 18 months or 24 months after the halving cycle of that year, which I think is like a brilliance to Satoshi's part, you know what I mean, as far as like scheduling these sorts of things. Is that going to happen? We have no idea. But what I do know is that MicroStrategy will be the best situated company in that situation if we were to ever come to it, because we'll always have like all of these different levers to pull, whether it's convertible bonds, whether it's selling shares at the money, whether it's doing all of these other sorts of things that an operating company can do that an IBIT will never be able to do. Plus, we've already been through a couple, bear markets already. You know what I mean? In February 2021, and then a couple months after that, we've been through the highs, been through the lows. Everyone and their mother thought Sailor was going to be margin called. None of that, turned out to be true, and here we are. You know what I mean?
Yeah, absolutely. And Sailor's been around now also and seen a build up into the bull run, I don't know what you can call it in 21, and then the bear market and the whole cycle. He has seen that, so I'm sure they're fully. I mean, imagine being part of that executive team on MicroStrategy, like Sailor and his team of quants, looking at these tools that we're talking about, trying to figure out what are they thinking. Yeah, that must be nice to be the flute fly on the wall there. All right, I think we had a good run here for almost 2 hours. Unfortunately, I couldn't see the chat and throw it on the screen. I had no idea. I got to go back and like watch it and see. But Ryan, man, it's always fun to have you on. Educational as well, but it's fun.
Dude, this was epic as always. Our number one priority is fun. My brand is fun, but maybe we'll learn something else along the way,
Maybe. Hey, let me see if I can get the fireworks going on my background again. It happened with the double thumb before. There you go. There you go. All right, epic. Ryan, give some handoffs. Let me get the X handles out again. There's at Raekwon there. There's at Ben Workman. Yours truly. What's some handoffs? Tell us about MicroStrategy True North on Wednesdays. That's streaming 7:30 Best Coast time. That's what it's called, right? And what else? What's going on? Tell us. What do you want to share?
Yeah, I mean, I feel like I have nothing to share with handles. Like, people are going to find us whether they want to or not. This is almost like a binary outcome. Like, people are either on the train or they're on the track. And people will know about MicroStrategy, if you know what I mean. Whether they want to or not, they'll know about it.
I love it. So this is not about people getting on the train or being at the station forgetting to jump on. Ryan is saying either they're on the train or on the track, and they'll be run over. I think that was the exit from. No, he's still there. I thought that was a rock pull, Ryan. I would say that was a decent rock pull. He just semi disappeared there, but he's still here. Yeah. Oh, and Quant Bros. Let me ask you. Absolutely love, obviously, Quant Bros show. You and Ponder Jeff. You have anything in the pipeline there? When can we expect to see the next Quant Bros?
Yeah, we're trying to have a few guests on. Dylan Leclerc, Maya Prabho, the president or future president of Suriname. So we're trying to do a lot of cool things there as well. You know.
Oh yeah, Maya. Down at the halving party in April in El Salvador, I was hosting a Women in Bitcoin where Maya was on, and I think that is a decent rock pull from Ryan. Thank you for watching. I don't have anything to add really. That is the X profile. Yeah, thanks for watching. I'll be back here hopefully with both Ryan, Ben, and Punter Jeff next Monday, 4:30 p.m. Western PST. Best Coast time, West Coast time, whatever. So yeah, thanks for watching. Sorry I couldn't see the chat today and throw it on the screen. It is what it is. Technical challenges sometimes.